They say only 18% of the over 5.5 million businesses that will qualify have actually filed, but the more word gets out, the more we hear, almost daily, that a client tells us, "My accountant told me I don't qualify for the employee retention tax credit." Being the largest network of tax attorneys and accountants in the country doing ERC for businesses, along with decades of experience in payroll specifically, nobody understands the complexities of the ERC program more than us. The challenge for majority of the accountants out there is that the ERC credit involves your payroll returns and other payroll-related expenses, and not a business's income tax returns, which is what most accountants handle. Because of this, accountants have a very narrow view of how to fully determine a business's eligibility. These misunderstandings are exactly why we're putting so much effort into community awareness campaigns to educate businesses of the facts. We don't want someone else's lack of understanding getting in the way of a business getting back tens of thousands, if not hundreds of thousands or even millions back in refunds. That wouldn't be fair to you as the business owner. Often, accountants are basing their evaluation of eligibility on the lack of a decline in gross revenue, and most of the time aren't considering the qualitative aspect of eligibility, since it's a bit more of a gray area and based on facts and circumstances. Meeting the eligibility requirements for a partial or full suspension is based on a set of determining factors and leaves uncertainty for many accountants. It's plausible that an accountant may only be considering the decline in gross revenue, because in March 2020, when the program was first created, revenue decline was the sole consideration for eligibility. The ERC program was updated in March of 21, and the news of this update has largely flown under the radar for quite some time due to the lack of accountant participation. So many are still only now hearing about all the updates and complexities added to the new guidelines. Since an accountant would typically rely solely on a quantitative data set, they require hard numbers to reach conclusions. This is why they may only consider the decline in gross revenue qualification aspect. The second way to qualify is if a business experienced a full or partial suspension of operations. A full suspension of operations would be easy to show since a business would have been directly ordered to shut down their operations. A partial suspension is based on facts and circumstances and meets the eligibility requirements through a qualitative data set rather than quantitative. An accountant may be less inclined to navigate this area since it is not supported by hard quantitative data and remains unprecedented. They may prefer certainty in numbers over a case narrative, and it's through this case narrative that a business can meet the eligibility requirements. The IRS released a warning to businesses on October 19, 2022, regarding third parties that promote improper employee retention credit claims. We fully endorse the IRS notification and are grateful for their efforts to raise awareness. The most concerning aspect of the notification received from the IRS is the absence of any warning regarding the selection of a qualified CPA or attorney for this specific program. It is common knowledge that both accountants and attorneys specialize in specific niches, and the majority of them are experts in income tax matters. However, this is a payroll refund program with different guidelines and nuances. Lack of expertise and in-depth knowledge of this program can lead to significant problems in the future, which no business owner wants. You require experts who understand the complexities of the tax code and IRS guidelines of this program specifically. This program has been in existence for over 2 years, and if your CPA has not informed you about it yet, or stated you weren't eligible based on limited knowledge, that's a clear indication they're not the right fit for filing your credits, particularly considering the potential consequences if the filing is done incorrectly. You don't have to be a guinea pig for your accountant. Our team typically obtains 10 to 20% more in ERC refunds thanks to our team's experience and in-depth understanding of the program's eligibility guidelines versus a CPA's lacking this knowledge and experience. The ERC program details are laid out in over 200 pages within the CARES Act. Our team understands every nuance, complexity, and gray area of this program, allowing us to maximize refunds while eliminating the risk. Furthermore, it's why thousands of accountants, attorneys, and other financial professionals refer their clients to us. We're leading industry experts in this specialized niche, and our team takes businesses through an extreme vetting process to make sure each client files an ethical and conservative claim. We get it, the word audit is scary, and it can be a very daunting process no one wants to go through. We cannot guarantee you won't get audited. Typically, it's large tax deductions that trigger IRS audits, but clean operations and ethical, conservative filings should not raise concern. We've gone even further, and our attorneys offer full legal representation, backing their findings in the event of an audit. There is approximately 5.5 million businesses that will file for the Employee Retention Tax Credit, and in speaking to our contacts at the IRS, they're anticipating only about a 1% audit rate. We thank you for taking the time to watch this video, and we hope you found it helpful. We'd like to invite you to click on any of the check eligibility buttons you see on the website, or any of the links, depending on where you're watching this. Take the next steps, find out if you're eligible first, and work with our team to collect the documents necessary to tell you exactly the amount of an ERC refund you can expect, down to the penny. We'd love your business, and we know thousands of clients aren't wrong, but there's never any pressure. If you decide to not work with us after engaging, we'll shake hands and part as friends. You have nothing to lose. Hopefully, we get the chance to get you some money back.